Good morning, unit holders and advisors, and welcome to the financial results presentation for the RFM Almond Fund for the year ended 30 June 2020. This is James Powell speaking. Today's presentation will cover the 2020 harvest results, which will be presented by Daryl Winter, National Manager of Horticulture. The FY20 financial results will then be presented by Sandra Walton, Senior Funds Administrator. And finally, I'll provide an update regarding the potential for unit holder liquidity through an appropriate wind-up of RAF. I'll now hand over to Daryl to provide an update on the 2020 harvest.
Good morning, everybody, and yes, thank you, James. I'd just like to have a bit of a run through of the season this year. This year was always going to be a lighter year, so it was our off-season year from a biennial bearing point of view. So the bloom was light this year, but the pollination was actually very good. We had very good hives, so we come through that part of it well. We did have some minor frosts at the start of the season as well, but once again, the frost fans that were in place and the fact that the frosts weren't that severe this year meant that there was no frost damage. The growing season itself was very good, but as everyone can remember, through the December period, early January, it was extremely hot and dry. But overall, the orchard come through that part of it well, so we were quite pleased with that. Harvest was delayed at the start. We did, after all that heat, we did get some rain, and so that delayed the harvest start. So we decided to change the system and go to the wet harvest system, where we go in, pick the crop up, even though it's a little bit moist, and pull it out and put it on the headland. You'll see that on the picture there to the right on the screen. That worked well, and that allowed us to gain a fair bit of time compared to some of the other growers around the region. So we ended up finishing our first pass by early April, which was a really good result. And of course, that then allowed us to do a full reshake of the farm, because when you go through the first time, you don't always get all the nuts off the tree. So this allowed us plenty of time to go through and do that reshake and get those almonds out of the paddock and out for sale, of course. We had an original forecast of 3.2 tonnes, but ended up with 3.5 tonnes, so was a very good result at the end of the day. Even though it was a light bloom at the start, pollination was good, and the growing conditions was good, all led to getting the 3.5 tonnes. So overall, a good result. I'll now hand over to Sandra.
Thank you, Daryl, and good morning, unit holders and advisors. As James mentioned, I will be taking you through the RFM Almond Fund FY20 financial results. The FY20 financial year was profitable for the fund, and the orchard performed well. Two crops contributed to the result, being the 2019 crop that produced 3.3 tonnes per hectare at an almond price of $8.43 per kilo, and the 2020 crop, which produced 3.5 tonnes per hectare at an almond price of $6.95. This provided total income for the fund of $28.5 million. Expenses for the period included $23.7 million in operating expenses to produce the 2019 and 2020 crops, $4.2 million in lease expenses for the orchard, and a management fee of $41,000. You will note that the management fees are quite low, and this is because Rural Funds Management waived the FY20 post-merger management fees. This has resulted in a before-tax profit of $650,000. Despite this good result, the forecast distribution of 4 cents per unit is unable to be paid. And this is because of concerns the FY21 almond price may reduce further to possibly $6 per kilo or even lower, which would impact the working capital position of the fund. I'll now hand you back to James Powell to provide an update on the possible wind-up and early liquidity for unit holders.
Thank you, Sandra. Before I provide a liquidity update, a quick recap on the merger that occurred during FY20. As many will recall, at the start of the financial year, growers overwhelmingly approved the merger of the AF06, AF07 and AF08 almond schemes to form the RFM Almond Fund, or RAF as we call it. The merger proposal provided a number of immediate benefits, including funding of applicable FY19 shortfalls. As shown in the diagram on the right-hand side of this page, RAF operates a leased almond orchard which is owned by the Rural Funds Group. The RAF leases comprise of 272 hectares leased until FY26 and 321 hectares leased until FY28. The merger documentation had also proposed to provide RAF unit holders with interim liquidity by listing the entity on the National Stock Exchange, and a timeline was provided in the documentation for this to occur. However, prior to listing, RFM formed a view that a sale of the Morale Orchard could be of benefit to both the unit holders of RAF and the Rural Funds Group. Consequently, in April 2020, the Rural Funds Group listed the Morale Almond Orchard on the market, and following this, conditional sale contracts were exchanged in August. If a sale is to proceed, the RFM board have determined that it is in the best interests of RAF unit holders to terminate RAF's leases and to complete an orderly wind-up of the fund. Why? Put simply, under this scenario, will provide unit holders with a better return than the forecast future returns when adjusting for the time value of money and the risk associated with continuing to operate the orchard. I'll now explain these concepts in a little more detail. Firstly, let's consider the forecast returns of continuing to lease and operate the almond orchard. The merger documentation included an independent expert report which presented forecast future cash flows for RAF. These have been represented on the right-hand side of this slide. The cash flows comprise of annual distributions and, importantly, a balloon-style payment at the end of the final lease term. These cash flows total $1.82 per unit, but importantly, they are not discounted for risk or the time value of money. The risks of continuing the fund include possible variability to things like crop yields, operating expenses, and the almond price. To provide an example of the risks, the forecasts assumed an almond price of $8 per kilo. However, as described by Sandra earlier, RFM believes the FY21 almond price could fall below $6 per kilo, and this has led to the cancellation, unfortunately, of the FY20 distribution. The other consideration is the time value of money. That is, $1 today should be worth more than the same dollar in the future. As the table shows, the majority of the $1.82 per unit would not be paid until some time into the future, specifically 2029. Therefore, the approach to compare these future cash flows to a payment in today's dollars is to bring them back to their net present value by discounting them for the risk and time. Fortunately, the independent expert also calculated a discount rate to calculate the net present value. Using multiple discount rates, the $1.82 per unit of future cash flows equates to between 59 cents per unit and 86 cents per unit in today's dollars. Another consideration is that throughout the merger process, RFM became aware that a material number of investors intended to access liquidity on the National Stock Exchange. It is possible that RAF may trade at a discount to its net asset value, and assuming a 10 to 30% discount would imply a trading price of between 86 cents to 67 cents per unit. As shown in the table on the right-hand side of this page, which summarises the information I've just provided, in contrast to these scenarios, RFM estimates a wind-up of the fund would result in a return of $1.15 per unit to RAF investors. RFM also expects that if the sale becomes unconditional and the fund commences a wind-up, it would be able to pay, as part of that, the 4 cent per unit distribution previously forecast. While RAF won't participate in the sale proceeds of the Morale Almond Orchard, because it doesn't own the asset, it will benefit from a net asset value improvement from not having to account for the leases on its balance sheet. Hence the estimated payout value of $1.15 compared to the current net asset value of 96 cents. Again, put simply, the wind-up is clearly preferable to unit holders. In conclusion, the FY20 yields from Morale have been good, but the ability to pay a distribution has been impacted by a lowering almond price and is an example of the risks of continuing to operate the fund. While the merger at the start of the financial year provided immediate benefits, RFM has determined it is in the best interest of unit holders to terminate the RAF leases and wind up the fund, provided a sale of the orchard occurs. We estimate unit holders will receive $1.15 per unit under this scenario. In fact, the fund would finish on a high, so to speak, benefiting from harvest proceeds of a 3.5 tonne per hectare crop, materially in excess of the previously forecast 3.2 tonnes per hectare. Contracts for the sale of Morale have been exchanged, but they remain conditional. And RFM, of course, will provide a further update to unit holders at the appropriate time. This concludes today's presentation. A copy of it will be uploaded to the RFM website. And we have included a slide on the FY20 tax we have included a slide providing FY20 tax information which unit holders may refer to. And, as always, please don't hesitate to contact RFM should you have any questions regarding your investment. I'll now invite participants to send any questions that they may have by using the questions dialog box on their screen. You can type your question in to the dialog box, hit submit, and Daryl, Sandra, or myself will gladly answer any questions that unit holders may have. I'll just pause for a moment while we wait for questions to come through. Thank you. We have a few questions coming through, which I'll now respond to. Any idea to the likely timing of the final payment? We had indicated in the presentation September 2021 as an indicative timetable. However, we will provide a more precise timetable once the contracts become unconditional, and I should say if they become unconditional. We've received several other questions, however, they're on the same topic. So once again, I just encourage any unit holders, if they do have any questions, please don't hesitate to send them through, and I'll just pause for another moment. We've had another question on the timing or the potential timing on the sale of Morale, which is different to the timing of the wind-up of RAF. The announcement was made in August regarding conditional contracts being exchanged on Morale. The two key conditions are completion of satisfactory due diligence, as well as Foreign Investment Review Board approval. The due diligence provision was for 45 business days. However, it did contemplate possible extensions if they're necessary because of, for example, restrictions in movement, which we're all experiencing due to COVID. But that does give you some guide as to the potential timing as to an announcement about the nature of the contracts. We have a question about the annual tax statements for FY20. Unit holders were emailed a copy of, my apologies, a link to Boardroom, which is the registry for RAF, which has the FY20 tax statements. There was no distributable income in FY20 from RAF. However, there was income which would need to be included in FY20 for the pre-merger time period from 1 July to 30 August 2019, and these statements have been previously posted to unit holders. If you would like additional information or a copy of any of those statements, please don't hesitate to contact Investor Services, and they will gladly assist, as many of you, I'm sure, are aware through previous interactions. It appears that, we've just had a query in regards to a movement away from the almond industry being a strategic move. From the perspective of the Rural Funds Group, it will continue to own assets in the almond industry. However, from an RAF investor perspective, so the RFM Almond Fund investor perspective, it's a matter of the economics of the entity in which you're invested, and based on an economic analysis, it's in the best interests of those unit holders, in the RFM board's opinion, to wind up the fund. There being no further questions, I'd just like to thank everyone for their time this morning, and again, just to reiterate our welcoming of any questions through your individual contact at any stage if the need arises. Thank you and good morning.